Hello friends, this is Raj Sastry from Raj Option Trading. Today is March 2nd, 2022. Hope you're all doing well. Let's take a look at the market, look at top ETFs, and look at beaten down growth stocks with solid fundamentals. So with that, let's jump in and get started. Look, we got fear gauge here. Fear gauge came to 24. That's a relatively good reading. Look, we had fear gauge at 18 yesterday. That's the extreme fear zone. Now we are still in the extreme fear zone, but a little bit better. So I think turbulence is going to continue. There'll be news about Russia and news about Feds increasing the rates. So market is going to be turbulent. So it's a great time to really trade in and out if you're used to it. Otherwise, I say buy when the market drops big time, like yesterday. And then hold on to it. That's a good strategy instead of trading in and out. So with that, let's jump in and get started. Look at the market here. Market is really going up and down nicely. Down here, up, down here. Now it's trying to make its way higher. So I can see this maybe continue a little bit, and then it will again come down because from a fundamental perspective, we still have geopolitical tensions. We got looming Feds probably increasing the rates. So that's why market has some good days, but expect the turbulence as you go forward. And as you look here, same story. Look, S&P 500 down, up, down again. So turbulence continues in all the major areas. But if you're long-term view here, look nice uptrend here. So all this downturn here, look down, down here. All these are blips. When you look from the rear view mirror, it's all great buying opportunity. So this is also same story here. I would be buying these dips here and accumulate. So with that, let's jump in and look at the ETFs. Look, from an ETF perspective, we got top ETF S&P 500 or SPY. Now we are out of correction zone. Typically when the S&P 500 is below 10% from 52-week high, that's a correction territory. Right now we are not in the correction territory after a nice run. But look at the volatility. You can hardly see so much volatility in S&P 500. IV percentile is 88. That's one of the highest here. It even goes higher, but it's very turbulent, indicated by IV percentile. So if you're a person selling put options, you can make a lot of money here. Look at the IV percentile in major ETFs. It's very high. Look, SPY high here. And we got QQQ again high. So you could make some good money selling some put options way below the current ETF price. And look what's going on here. We got TQQQ, nice bull run here. It's a triple X leverage ETF on the bull side on QQQ here. Look, it's up nicely. So I know a lot of people who trade TQQQ when the market is down big time. You buy some TQQQ. When the market goes up, you can sell it off. So it's a very short-term trading. You can't use it for long-term, even though you can see here long-term it did very well also, but it's mainly a short-term trading vehicle. Same story. Look, UVXY after jumping big time yesterday, it came down today. All these volatility instruments like UVXY and VXX all dropped off today because market was up. That's the reason. So with that, if you scan through here, major indices are up today. With the some of these inverse ETFs are down as usual. All right, so with that, let's jump in here. Look at Russia. Russia, as you can see here, RSX is down big time. I think it's really tough time for the folks who are owning RSX. Look, it's a bloodbath here. So I think it's good to wait out a little bit and then see how it goes. Gold is today it's a little bit down today. It had a nice bull run as you can think of. All right, now let's look at stocks. From a stock perspective, we look at stocks with the volume more than 1 million shares traded and low to mid valuation, PS ratio less than 15, and solid financials, Altman Z-score more than 1.8. And we got a nice quick ratio that tells you these companies have got enough current assets to cover short-term liabilities. So these companies are not going to go bankrupt. So with that, let's jump in. Look, top of the list, we still have EPAM here. This list is sorted by 5-day performance. Look at the 5-day performance here, all down big time here. Top of the list, we got EPAM Systems, which is a software company. They do a lot of business in Russia, Ukraine, and so on and so forth. Look, stock is down big time, but look at the jump here. Today we had nice 16% jump here. And I know many of you bought this stock when it's down big time. I also bought it, but it's look, it's nice uptrend here. And look at the RSI here. RSI is still low. That means that you can still buy the stock even up here and accumulate slowly. Look at the overall score, 94. That tells you it's a good company. And look at the profitability compared to industry. It's the top rank. It's a very good from a profitability perspective, growth perspective, as well as valuation perspective. Valuation is slightly high, that's why it's 3, but 3 is even better. It's not more than 3, so it's good from a valuation perspective. Also indicated by price to sales ratio, which is 4, which is not too bad at all. Company is making money, net margin positive, so that's why you could still buy up here. And then we got one more here, ANF. I think many of you know ANF here. Look, stock is down big time. Look at the drop in one day here. And look what's going on here. It's got a high short ratio. Short sellers are breathing down its neck here. So that's the reason it's coming down pretty hard. And look at the net margin. Company is making money. I say you can slowly start buying ANF here if it comes down again. Look, short ratio is high, so that's why it can start going higher because it's been down for a while. IV percentile is 41. That tells you stock is sold off here. So you can expect a short squeeze in ANF here. And we got a few more for the long-term buyers. Keep watching the overall score here. If the overall score is high, like 80, 85, so long-term buyers can buy these stocks here, provided RSI is low. Both these stocks, actually all these 3 stocks work here. Look, nice RSI here. So all these 2 stocks here, they work. You could take advantage of them given it's a low RSI here. And stocks are trying to bounce back here, both MTZ as well as MGA. You could take advantage and buy some slowly. And as you can see here, both of these companies have got net positive margin. These companies are not losing money. And then you got Taiwan Semi. It's a great stock. You could buy this company. And look, they got a nice 38% net margin. That's a great net margin. And stock is sold off with a low RSI here. And as you can see here, stock is trying to go higher in one day, but still it's down with the low RSI. You could buy this one also. Understand it's got overall score is 53, which is not as high, but it's still good. Look at the growth, profitability, and valuation against the industry. It's pretty good here. And then you got Planet Fitness. It's down big time, as you can see here. Today it try to bounce, as you can see here. But this is a relatively okay stock with the 9% net margin. Company is making money here. And as you can see here, RSI is 34, tells you stock is sold off here. You could buy this one also. As you can see here, company has made nice money for investors in 5-year time frame. Nice 289%, not too bad. And then you got a few more here. Keep watching the overall score, all nice and high. That's what I like it. And keep watching net margin. Many of these companies have got positive net margin. I think all of them have got positive net margin. That's why these are the good ones here. As you look through here, look at the ones with highest net margin. For example, Air Product Partners, APD. Look at 20% net margin. That's very good here. And stock has been down, as you can see here, with the low RSI 26. You could buy this company here. This will also bounce back nicely. And we've got a few more here. Indian software company Infosys. You could buy this one also here. Nice 20% net margin. Nice overall score. RSI is 43. Tells you stock is sold off here. It's a low price stock, just $22. This can go high in a couple of months. And we got a few more, as you can see here. I love Baxter also. It's a great company here. And look, it's got nice overall score of 93. And stock is relatively sold off with the RSI of 47 here. And it's a net margin, a positive company, 10% net margin. And you got TREX, one of my favorite. Look at the net margin, 20%. Company is making money. Stock is sold off here. This is a great one to buy also. And we got a few more as you can see here. Illinois Toolwork is a good one here. You could buy this one also. And look, RSI is 30, tells you stock is sold off. Cerner, it's being acquired by Oracle, or at least there's agreement. So I would not trade it at this time here. I would not buy here. You could buy Oracle instead. And we've got a few more as you can see here, all good ones. Look at the overall, nice overall score here. Those are the good ones to buy. And as you can see here, net margin, keep watching net margin. TEL, one of my favorite company, TE Connectivity. It's not covered much in the industry. It's a great company to buy. Look, RSI is sold off here. They are into IoT, Internet of Things. It's a good company to buy. All right, so let's look at a few more here and go from there. And we got here Estee Lauder. It's a great company. And look, they got RSI 35 stock is sold off here. Stock is trying to bounce back in 1 day, 5 day. You can buy this great company here. Net margin positive. They do have some debt, long-term debt, but quick ratio is nice, and it's 1.3. They do have enough money. Look at the profitability. Number one, growth. Number one, industry valuation. Number four, a little bit high on the valuation, but it's doing very, very well against the industry. Look at the Piotrowski F score. 7 means it's in a tip-top shape when it comes to its financials. And we got Cummins, one of my favorite stock here. You could buy Cummins, it's sold off here. Look at the RSI 21. That tells you completely sold off at these levels. Nice overall score. Nice comparison to industry here, doing very well. Number 2 rank in the industry when it comes to growth, profitability, as well as valuation. It's a great one to buy here. And I also like Mazimo. Mazimo, it's a it's a medical device stock. Stock came tumbling down after the acquisition announcement. It's a great buy here. Look at the net margin, nice positive net margin here. And then you got a few more as you can see here, even G and TX, nice net margin, 21%. You could buy this one also here, nice overall score. And look here, KLA 10 core, one of my favorite stocks. Look at the net margin, 37%, and overall score is 82. Nice comparison against the industry. It's doing very well. Number 1 rank in profitability and growth, and number 3 rank in valuation. You could buy this up here. And I always love to buy both LabCorp as well as one more I will talk through, DGX. Both are good when they're down like this here. Look at the overall RSI here, 46. Now stock is bouncing back here. Many I've seen LH and DGX come down drastically and then go higher. It's a good one to buy at these levels here. And then we got a few more as you can see here. Keep watching the net margin here. Look at the ones with nice and high net margin like NVS here. It's a nice net margin here. NVS though, I think stock has not done well. Look, it's just done 53%. It's okay, but not great. We got a few more as you can see here. VMware is trying to turn around slowly, but it's a good one to buy. After the separation from Dell, the company will do well as you go forward. Nice overall 90 score. That's a good score here. And we got a few more as you scan through here. We got Coca-Cola, nice net margin here. This is for the folks who want to buy Coca-Cola for dividend here. Right now it's a little bit high. Keep watching the RSI here. That tells you it's a little more overbought here. I would wait for a pullback here. Whereas Accenture is a great stock here. You're getting the best, one of the best stock at the discount here. You could buy Accenture. RSI 34 tells the stock is sold off here. This one is a great one to buy up here. And we got a few more here. Keep watching the overall net margin here. We got nice one here, Lam Research. I like this company also. You could buy this great company here. Nice industry comparison here. Number 1 in profitability, and growth is number 1, and valuation is number 2. It's a great company. And I got a few more. We got a gold stock here, Newmont, one of my favorite. You could buy this one also here. It's a good one to buy. And I've got two more as you can see here. So with that, as usual, keep watching the net margin. This market likes net margin positive companies. All these companies work. And keep watching the RSI. You want to buy when the RSI is below 40, that's preferred, but at least below 50, that's okay. And keep watching the industry and how the company is doing against its own industry. If the score is lower the better, because it's a rank. Lower rank is better. So I say when the rank is low, like 1 1 as example, 113, 112, those are the stocks you want to buy and go from there. And look, we got Altman Z score, tells you all these companies got enough money. And you can also look at free cash flow here. I like the ones with the free cash flow positive. Those are the good ones to buy. And we got one here with the negative free cash, which is Take Two Interactive. That's a good company. I like this company. Look, RSI is 44. That tells you could even buy this up here. So with that, thank you very much. Happy investing and trading. Please subscribe.